As you know, China's real estate has issues, but did you know that the United States was requested to bail them out? You came here for the truth, so let me unveil that for you. One report is claiming from the very high up inside of China, asking the US, coming, begging, pleading for a bailout. We're going to investigate and look at what's happening inside of China right now today. Let's begin. Of course, China has had some problems. There's no question. There's no doubt. And we've seen it inside their real estate. That is for sure. And I'll show you what's going on in depth. So the first thing was that the leader of China came into the United States, greeted by Gavin Newsom, the governor of California, and they had this to say: China ready to improve ties with the US at all levels. And that is good. That's positive, because when we talk, we're always going to find common ground. We may not agree on everything, but just like you might have arguments with your coworker, or maybe it's your brother-in-law or sister-in-law, you can always start talking and at least be reasonable. Now, that might be difficult in some cases, there's no question about that, but it's better than not talking, because when we don't, we're going to actually build up, and that steam, that pressure, like a pressure cooker, is going to get hotter and hotter, and we're going to have some problems. What's going on here, if it was legitimate, would be good, because actually the situation over the past few years has gotten worse than where it was before. And so right now, the suggestion here is that they want to improve ties. Why though? Why now? I mean, what is happening? What actually precipitated this? And one claim that I wanted to bring out, this is oilprice.com website. $1 trillion bailout. What the leader of China really wants. And you could see here, despite a significant economic crisis in mainland China since 2015, she has taken minimal steps to address it. At least that's what they're saying here. During his visit in San Francisco, he seemed desperate, requesting a substantial $900 billion bailout for the Chinese economy. The leak came from within the CCP, indicating a faction eager to bring the leader down. Now, we've been talking about this a while with the crisis going on, that the leader has been taking more and more and more and more power. I often refer to him as the emperor, because basically there is no opposition. And over a period of time, putting the laws in place, there are no votes taking place basically that mean anything. Everybody unanimously votes for him, and if not, well, they know what happened. And of course, during this period, there has been a concentration of power. But some people, even though they might be voting in that direction, are saying, we don't want this guy anymore. We don't like what happened during 2020. We don't like the concentration of power. We want him out. Maybe a reformer to come on in. Who knows? We don't know what's true. We don't know what the stats to believe. We only can go with what we have in front of us. So that's what they're saying. It's very vague on what was exactly requested. Was there even a reply? They say here, we don't know. So we're going to look at it. What I think is going on is they want more private sector to come on into China and invest. Bonds, and of course, even in the stock market, maybe in the real estate. Hey, why don't you develop your stuff over here? We'll give you discounts. Let's get rid of the tariffs. Let's make things happen. More development, more building, more job creation, and that would get the engine turning. Any stimulus that's being done by China would create more inflation on a global scale. Keep that in mind, okay? I want you to think about that. She steps up economic aid with new debt issuance and a PBOC, the People's Bank of China, visit. Fiscal deficit ratio raised to about 3.8% of GDP. So basically they're just saying, we're going to spend more money. That's all that means, okay? We are going to spend more money in order to get the economy moving. Now, of course, we can look at that one side and say, look, they're in trouble, they're going to collapse, all of that. But let's flip it, and I want to show you something. Developing countries owe China at least $1.1 trillion, and the debts are due. Some say that this is being done intentionally, just like the IMF would be doing. They put those countries in debt with terms they know that they can't get back, and that is in a way to sort of take more control of these countries. In this case here, China, they have a setup, they have a system going whereby, with the Belt and Road Initiative, with others, where they could set up infrastructure along the way. So if they need something, whatever resource that might be, well, they would then mine that in another country. They would then get resources from that other country. They could have their people in those positions over in that country. They could own the ports that would then distribute that back into their own country. And so this kind of thing has been going on for a while, and some are talking about the fact that, yeah, they're doing exactly what the IMF is doing. When we look at it just purely from an economic scale of $1.1 trillion, that would kind of change things, right? If they're going to get that money back, or they're going to have to renegotiate it. It is a difficult time for a lot of countries. The growth isn't there, and they'll probably have to renegotiate. Are they going to take assets instead of the cash? That would be interesting. Oh, you can't pay back? Country in Africa? Maybe we'll just take that from you. Maybe we'll take that port from you. Maybe we'll take those mining rights from you. Who knows? The focus of China's Belt and Road Initiative, very clearly at the top of the list, energy. Energy. Also on there very heavily is transport. So the rails, the systems that are putting these things or pulling them out of the ground and bringing them towards China, you could see where that's going, okay? Tim Cook can't make iPhones without this Chinese company and its CEO. And so we're being told, yeah, they're getting off of China, they're not doing this and that, but let's be honest, they are not able to just flip a switch. Okay, and that company, by the way, is Luxshare Precision, Luxshare, Luxshare. Okay, and so they're talking about this and basically just saying, look, they are required in order for Apple to make their iPhones. And understand this, yes, Apple is a company in the US, but they produce phones, they produce iPads, they produce MacBooks, and so on, that are then shipped out to consumers all around the world. So yeah, they're manufactured in one place, the company exists in one place, but the customers are all around the world. And so that's something to keep in mind. If you lose the market share of one country or you lessen it for a reason, that affects the US. Suddenly you don't have the desire to invest in that company. Maybe it gets reduced somewhat and so on. So keep that in mind, okay? Property in China is a big thing. In fact, it's so big. Do you remember? Pop quiz. How big is the Chinese real estate market? How big? Do you remember, in the trillions of dollars, how big China's real estate is? We'll talk about that. I'm going to show you that. If you put in the comments below, I'll talk for just a minute here. I want to see, and please, everybody, go down in the comments and see if anybody got it right. I'll try to get those thumbs up in there and everything. It's so big, and obviously there is a crisis. So if the United States were to bail out China with $1 trillion or 900 billion, it really wouldn't make much of a difference in the size of this property market. It wouldn't be able to do so. So something else needs to take place. But what I think is, many people will go, oh yeah, China's going to bail it out. China's going to bail it out. They haven't really done that. I mean, they've stopped the complete collapse from occurring, but it hasn't been performing well at all. I think everybody would agree with me here. So what was that number? Let's look at it right here and now. $62 trillion. $62 trillion. And that is in fact, the biggest asset class in the world. 62 trillion. Chinese home prices worsen. And everyone gets a gold star if they got that number right. All right, Chinese home prices worsen after a pickup earlier in the year. Price falls are getting worse. You could see that secondhand homes is a cultural thing where people just don't want them. So foreigners maybe they'll get those, but obviously we can see that regardless, the prices have come down from their peak. There's no question about that. And that tells us that, yes, some of that insanity, which has been going on for years, has been, winding down. That's healthy, I think. But they just don't want it to collapse. That's the problem. China races to end the property panic, fill a $446 billion funding gap. A lot of debt, a lot of issues going inside China, and it's just continuing to unfold, whether it's Evergrande, whether it's Country Garden, they're all experiencing a problem. This is the home sales that have continued to plunge. Nobody is trying to get in now. Okay, they realize the problem from 2020, and they're kind of just saying, no thanks, not going to do it. And that means, with investors inside of China, they are looking for other opportunities. But the interesting thing is, they're kind of holding on to a lot of cash. They're kind of just in wait and see mode for themselves. And of course, there's capital controls. There is a lot of restriction in what they can do with their money. So I think right now they're kind of just playing it cool. What I would say is that if you, in your personal circumstance right now, you are in need of somebody to take a look at your finances, you want to get a CFP or a fiduciary to just give you some, a look over on what you're doing, and you want to get it for free. That's why I linked up with Money Pickle to get you out of that pickle, or just to give a second opinion on this, because they are able to do so. And what you do is you click on this link in the description right at the top. You go there. There's a calendar thing. You select on the calendar when you want your meeting. It's available like right away. So you can do that, get that, and it's totally free. That's why I feel confident, and I've gotten a lot of great feedback so far. So definitely do that, and they can help you out. Okay. And the comment of the day, thank you very much. As always, my the comment section on this channel is so fantastic. I appreciate each and every one of you, but I've learned so much from the comments over the years. And unlike the others, okay, I actually do appreciate, not only do I, oh yeah, I read all your comments. No, I've actually read, as far as I'm aware, basically every single comment, and I've been commenting every single day since the beginning of this channel. Anyway, comment of the day: extremes produce their own opposites. This can be applied to any aspect of the economy. And that is true, just like Newton's third law, I think. For every action, there's an equal and opposite reaction. We could see what's going inside of China. I would be very cautious. Some say that China has kind of bottomed out and we're going up from this point. But my indications are that it's kind of, who knows at this point, okay? Because the total social funding, basically the amount of money that's being pumped into the system, is not what it was before. And that's kind of what we need. We need stimulus. The economies of the world can't even grow on their own anymore. They need that adrenaline shot. They need that espresso shot. And I'm not seeing enough right now to make it a viable option. That's my opinion. I want to know what you think. Don't forget to tune in tomorrow. Make sure you search The Money GPS. It may not end up in your feed. You got to search it. I want to see it tomorrow. Take care.